Social Security, probably one of the most hotly talked about topics. John, we do financial planning at Centennial Wealth at all of our locations. And what do you think we spend? 25% of our time or more talking about Social Security? Whether you're 30 years old, 90 years old, or somewhere in between, I feel like Social Security is somewhere on your mind at some point or comes up in some discussion. So we want to take some time today and talk about the timing of that. Now, as you're probably aware, there's different ages at which you can collect Social Security depending on your situations. And a lot of it comes down to, we have different planning tools available to us. We sit down and can map out, okay, if you take it here, your spouse takes it there, if you're single, married, widowed, all these different scenarios start to play out. And sometimes folks come back to us and say, you know what, I just want my money, or there's a mental reason, or my neighbor did this, or so-and-so did that. And there's these other justifications they have for that. But there's a lot of unique combinations that can happen out there with maximizing Social Security. Many things have been taken away per se that used to be available years ago from different combinations of file and restrict, file and suspend, and some of these things that used to be available. But there's still a lot of choices out there, and it's important to know those choices.
Yeah, that's true, Art. As you go back in time, we've been around long enough to remember all those different options, and it made it a lot more complicated back then. It's simplified a little bit, but still, it's a key part of your overall retirement plan. And I know there's a lot of press out there of when is Social Security going to change and what's going to happen next. Obviously, nobody has the answer for that for the future at this point, but it's trying to do the best that you possibly can with when to draw. And that's where you're going to want to take into consideration ultimately when are you fully retiring or even partially retiring, and what your income actually is. So there's going to be this full retirement age. For a majority of people, it's probably going to be age 67 currently. Depends on when you were born and everything. But if you're still earning income, so W-2 wages, salary, whatever it may be, there's going to be these income limitations on what you can make and draw Social Security at the same time. So for 2025, that's $23,400 is that limitation. So maybe walk through an example, Art, of how that would work and what you want to be cautious of.
Absolutely, John. The first thing I think of too is defining what counts towards that number, right? So it's earned income. So this is confusing for a lot of people. Is earned income is really defined by, think of it as a paycheck. It's earning money through employment, whether it's 1099, W-2. It is not passive income. It's not rental income. It's not interest off of your savings account. It's not distributions from your IRA account. That doesn't count towards that earning limit that John's talking about here and stuff like that. So that's kind of step one of knowing that. But let's say you want to semi-retire, right? Or go back to work part-time. We have to be cautious if we're drawing Social Security and we start earning too much money, they're going to start taking back, basically for every $2 you go over that limit, they're going to start pulling back $1 of your Social Security. So it's a pretty significant penalty, and you're paying tax, on both of those as well. So it can be a little hurtsome, if you will, from that perspective from there. So when, again, thinking ahead of when you're going to retire and what your income and stuff, it's important to start planning these measures out.
Yeah, and another way to look at this is, what if it's your desire to delay? You can delay up to age 70. That's when ultimately the latest is that you can draw Social Security. But is that the best choice for you? Maybe if you have other assets that you want to draw out, as an example, say it's deferred money, IRA, 401k, that you want to draw some of that money out that's taxable income and delay that Social Security, because again, between ages 62 to 67, it's growing. Your Social Security benefits are growing at approximately 5%, from 67 to 70, about 8%. And so you're seeing those benefits grow. It may be something to look at. Okay, should you use other assets and delay Social Security? Again, may not be the best solution, but that may be something that comes into consideration.
Absolutely, John. There's so many different factors out there, longevity, and the piece that you started, your other assets, that's the piece that so many people forget about, and they don't consider in the planning for that Social Security. Your IRAs, your Roth IRAs, your savings accounts, all this sort of stuff, looking at that as a holistic picture and and mapping that out so you're not just focusing on one specific thing. Again, all this stuff works together as a team and works together. We want it rowing in the same direction. So if you'd like, give us a call. We'd love to help you plan your Social Security and how that fits into your overall plan so you can plan to retire well.